Jim Wyckoff joins us this Thursday. Jim, good to see you.
Hello, Danielle. Always nice to be with you.
Jim, I'm catching you right after Mario Draghi's much anticipated conference where he announced today that the ECB will buy assets for at least 2 years in an effort to boost inflation and economic growth in the euro area. Jim, any surprises here today?
Well, at first blush, Danielle, the marketplace's reaction was that they were a bit disappointed that the ECB was not more aggressive in its stimulus. So we'll have to see how that plays out. It's early. I think that given recent downbeat data coming out of the European Union, including serious worries about deflationary pressures, I think you're going to see the ECB keep its foot on the throttle as far as pretty aggressive monetary easing.
Jim, do you think we'll see gold now move in reaction to the ECB's next steps?
Well, I think it will, Daniela. It is as the ECB continues to ease monetary policies, it's a bullish underlying factor because it undermines the faith and the confidence not only in the European Union economy but also in the euro currency. Now, it can be argued that deflationary price pressures in the EU would be bearish for gold as a raw commodity, but it's my sense that the safe haven demand for gold would trump the deflationary pressures based upon the eroding confidence in the euro and the European Union if we did see that deflationary price pressure.
Jim, let's look at your morning commentary now, where I really like how you summed up the three important features at work in the marketplace this week. One, we have the US dollar, which hit a 2-year high against the euro and a 6-year high against the yen. Second, we have a NYMEX crude oil prices hitting a nearly 1.5-year low. And third, we have the Ebola scare in the US now.
Yeah, Daniela, the first two, the strong US dollar and the real slump in the raw commodity sector led by crude oil prices this week, those two factors have been major bearish elements working against gold and the precious metals. It's important to point out that commodity markets are highly cyclical. In my 30 years in the business, you see peaks and troughs. You see serious rallies and serious downtrends. And right now we're in a serious price downtrend in the raw commodity sector. The good news for the bulls is serious price downtrends lead to uptrends, and that is going to happen. History shows that. So if you are a gold market bull in waiting, you can take some solace in that there may be some bargain buying opportunities here at these present low price levels, because history does show that the raw commodity sector will turn around, and probably sooner rather than later.
Jim, you also noted that the marketplace now awaits Friday's jobs numbers, which you argue is the most important economic report of the month.
Yeah, Daniela, any deviation from the consensus non-farm payrolls figure, which is presently up about 215,000, any deviation from that is probably going to cause some serious movement in the marketplace, including gold and the precious metals.
All right, Jim, let's wrap now with your Wyckoff market rating of the week for gold and silver.
Daniela, I'm giving December COMEX gold a Wyckoff market rating of 1.5, firmly in the bearish camp. Prices are in a solid downtrend. Really no early technical clues in the gold market that this downtrend is going to end anytime soon. It would not surprise me here in the near term to see prices dip below the 1200 level, and we've got some very strong longer-term support at 1180. Support for December COMEX gold at the 1200 level. We've got overhead resistance at this week's high of 1232 and change. Looking at the silver market, I've given it a Wyckoff's market rating of 1, fully in the bearish camp. Silver prices in a solid downtrend. I'm talking about December COMEX silver. We've got solid support at 1650. Solid overhead resistance at the $18 level.
Well, as you say, Jim, it can be viewed as a buying opportunity. Thanks so much for joining us.
Thank you, Daniela. Can't wait till next time. Bye-bye.
And thanks for watching this edition of Technically Speaking with Jim Wyckoff. Email us, newsfeedback@kitco.com. Thanks for watching.